Hey everybody, hope you're doing well. Hope you had a great week of trading. Today we're going to cover the Qs for March 15th, 2021. So let's jump into it. So first things first, everything we talk about has come out of our Prep to Grow big data AI platform. All of our projections and our numbers and what we're going to show about comes from there. You should assume everything is an opinion and a recommendation from Prep to Grow. Also, if you like this content, please like and subscribe. But let's jump into this. So last week we projected it was going to be volatile, a lot of up and some pullback and some up again, but ultimately end at a bull, which occurred. So 5.3% up for the week, which is fantastic. The week before that, or March 1st, we were projecting it was going to be flat or with a little bit of a pullback, but get ready for the Qs to come out of this in the next week, which is exactly what happened. So our algorithms are very strong at picking up pullbacks and the coming out of the pullback signals. Next week, it'll be a small bull. You should expect that there's going to be steady, consistent growth in the Qs. We're hoping, at least the data is showing, not a lot of volatility, not a lot of ups and downs, because our growth projections are where the stock prices currently are at. So that's great. At least the underlying companies that make up the QQQs are where they should be at. Same with the Qs. The other is some concerns, which may disrupt all this, is stock market. The general stock market is outpacing their company growth. So the companies that make up the general stock market, it's not their performance and their revenues and their headcount and everything related to that isn't keeping pace with their actual stock prices. So that's what happened over the last 3 weeks with the Qs, a big pullback. Now there has been a pullback for the broader market. So if there is a pullback, it won't be as noticeable, but you should expect that the broader market is in a small bubble. And if they decide to pull back or the growth doesn't start to match where the stock prices are at, there's going to be a pullback. So be on the lookout for that if you're in stocks and ETFs outside of high tech. Unemployment is another big issue with relief packages that were passed. It should help with that. Unemployment rate is currently at 6.2, but true unemployment is probably 4 to 5 percentage points higher than that. In August, they changed the equations around it, and honestly, it made it look a lot better than it actually was. So hopefully with the relief packages, it won't blow up into an actual issue. But just be on the lookout for those two things impacting. If you hear noise around that, then start to pare back any options or holdings you have in the Qs. So let's look at the growth projections. So stock growth is 37% up from January 1st, 2020 to current date. Our growth projections are up 36% from January 1st to current date. So good alignment, which is great. There's not a bubble. There's not a deficit. It hasn't gone down below that. So it's where they need to be at for the NASDAQ-100 and the Qs. Pricing is good. It'll be boring for option traders for sure, but it's just sometimes how it goes, especially without a lot of earnings announcements. Now, the analyst projections for the companies that make up the Qs is less. It's about 15% to 18%, 12%, 15 to 17% less than actual stock growth. So their projections for growth is less. They may have their reasons for it. We don't see it that low. And our arguments have been very good about picking up the fluctuations with the stock markets for the Qs. So stable, consistent growth for the next 2 weeks. A little bit boring for option traders. So don't try to jump into calls or puts expecting some volatility that's going to pay off in the short run. So be cautious on the short-term options. Long-term, nice steady growth should pay off. Short-term, through these boring periods of not a lot of volatility, it's always a bad play from a option perspective. Who's announcing next week for the Qs? Nobody that we track. We track 94% of all the companies that are in the Qs. We track U.S. And European-based companies mostly. We don't track any Chinese companies that participate in that. It's just that while we like them, their underlying data is suspect at best. And whenever we try to predict on them, we predict that their numbers are artificial. So we don't ever bring in Chinese companies as part of our calculations. We do factor in that there's a fudge factor, like for companies that make up the NASDAQ-100, to make sure it doesn't skew our algorithms or results in any ways. But their day is not great. So who's announcing that may be notable in the tech sector? Jabil, support.com, Semtech, all pretty boring. Jabil, Semtech, chip company, support.com, SaaS company. Next week, it's a little more interesting. There's two that are announcing, Adobe and Paycheck. Cumulative, they make up about 2.08% of the Qs. So hopefully some more interesting volatility next week or the week of March 22nd. So let's take a quick look at those three for announcing next week in the tech sector. Again, none are announcing for the Qs. If you haven't seen this before, this is the Prep to Grow application. It's our stock screener and recommendation platform. If you're looking to see what companies participating in the Q or announcing, you just go down to where we have our ETF screening. We have ARC, Jets, SPY, so on and so forth. Hit QQQ, hit apply, and you'll be able to see all companies that participate within the Q. Again, none of them are announcing next week, so a little bit boring for the Q's perspective. Well, let's take a look at the three that are announcing in the tech sector. So Jabil, support.com, Semtech. We'll start with Semtech just because it's the most notable, I would say, or we have the best success predicting them. So we're using them as a stock, predicting as a stock. So if you don't know who Semtech is, they're in Southern California, typical circuit board company, military, digital sensors. You probably got one in your car. They announced on March 17th, 2021. Their PE ratio is really high at 92%, 92.8. Their earnings per share is pretty good. They don't have a lot of revenue. They're $500 million company, $500 million company. So a smaller cap company. We think you should buy because our predicted price is going to go up about 7%, or 10%, or $7 increase in it. We are pretty successful at predicting for Semtech, 92% on predicting it to sell within 5 days, 96% in 30 days. If you were to buy this on March 5th, the expectation it'll sell by April 8th. And we're recommending it as a stock. So if we recommend a stock and not an option for company, it typically means their options chains are terrible. It means really there's nothing in their chain that has good movement to stock price. Usually that's based upon option volume, open interest, that kind of stuff. So if you buy into Semtech for a call in the 70 strike price, the reality is it's probably very little volume to open interest, and so you may get stuck with a dud on the option side. So if we look at next one, which is support.com, there's no analyst that actually track support.com. So they're really under the radar. They are a very low cap company. They're announcing on March 16th. They're a SaaS company doing support-based, cloud-based software. I heard of them. I don't know anybody that works for them. They're in Redwood City, which is in the Bay Area, which obviously I love the Bay Area being there. We're projecting that they're going to go up about 10% in the next potential 30 days, or next week sometime if we look at the date down below. So we're not great at predicting in 5 days. We're pretty good at 30 days. We rarely predict any movement with support.com, and we predicted this on March 10th, so a little bit of history there. They've done real well. Looking at their fundamentals, they're actually growing about 3 times higher than were last year at this time. So they've experienced some good growth. No one's predicting them or tracking them, but we see their growth and they look good. Surprisingly, as people start to outsource more and more of their support services SaaS, I guess these guys are doing some great job on it. Their 200-day moving day average is 1.85. Their current price is 205. 20 days 2.23. But if you look at over the last year, they're down to the dollars, $1.69, so on and so forth. So they've had very good growth over the last year. They look good. They've had good growth. We're predicting, again, a stock for them because their option chains are probably just a mess. So those are the two we're going to cover. Let's jump back in and just talk about some of the signals we're seeing for the next couple of weeks out. So if we look at the 30-day predictions, there's two notable things. One is when we look at the pullback signal coming up, this is where we saw them, right? A spike in puts. We started seeing it prior, February 20th. And if you look at any of our previous Q videos, we started saying there's a bubble, there's going to be a pullback, get ready for it around this period of time because there's a spike on both sides on the calls. Now, towards the end of February, we saw that the puts started to drop, and that to us is a recovery signal that it's gone through its pullback and it's going to start to flatten and level out. What we're seeing right now for March 4th is that things are where they should be. You got a good mix of calls and puts for FANG pluses and call puts and stocks for non-FANG pluses. If you don't know, we make a big difference between FANG pluses and all other companies that participate in the Qs, just because the 15 companies or so that make up the FANG plus own 65% of the total holdings for the Qs. So you should always separate those two when there's that much of there's that much influence by a small set of companies. But again, the data looks like things are in parity. Prices are where they should be, and should be flat to steady growth over the next couple of weeks, small growth over the next couple of weeks. Again, short options, wouldn't recommend it, bad play right now. So if we jump on to the next, 30-day predicted price, like I said, pretty flat, right? We had some spiking as we're coming out of the pullback, which signals we're going back into a growth. So we saw that coming into the week of the 8th. So a big spike in price here at 807. That's a big price down here. If we bring these two together, it essentially equates to about $300 for where the Qs are at. So it's essentially where they're at. But when we see the spike by the FANGs right here, it means, again, we're coming out of the pullback and these are going to start to look good. These have really leveled off over this week to more of a flat trajectory. So that's why we're expecting it's going to be a bull. Not a lot of volatility coming over the next couple of weeks. So hopefully just nice, calm growth over the next couple of weeks. Maybe a good time to buy some stocks, get ready for the next uptick on this. But I appreciate your time. As always, if you have questions, please reach out to us. If not, happy trading and hope you have a great week of trading. Take care.